Coming up on the SBS on the Money podcast, US inflation rises, but the tech-based Nasdaq still hits a record, and Australia's starting to build more new homes, but many are taking longer to be completed. We'll have all the details next. Hi everyone, it is Wednesday, the 16th of July 2025. Welcome to the SBS on the Money podcast, where we are bringing you consumer finance and markets news you can use. The Australian share market did fall today despite a mixed lead from Wall Street because the Dow and the S&P 500 fell, but the tech-based Nasdaq rose to a new record. The S&P ASX 200 down by 0.8%. We'll have the details with Niv Dagan from Peak Asset Management in a few moments. But first, there's been a rise in housing activity, with the number of home building starts increasing by almost 12% in the 3 months to March. But the Bureau of Statistics says the actual number of dwellings completed in that same period was lower. Economists at AMP say it means completions are only on track for 180,000 dwellings last financial year, and that's below the government's target of about 240,000. So for more on that, Stephane Youssef spoke with the senior economist at AMP, My Bui.
So today's figures have some good and bad news. So maybe I'll start with the good news first. So good news, commencements of building activity in Australia has increased 11.7% over the last quarter, or 17% over the last year. So that's a fantastic numbers of trending up in building approvals as well as building commencements. I think that reflects the fact that a lot of the pipeline pressures in the construction industries have been eased quite a bit over the past few months. So if you look at dwelling cost inflation, it has gone down to just 0.8% over the last year, according to CPI data. At its peak, building inflation was actually above 20% in 2022. So that's fantastic news. On an annualized basis as well, building commencements as well as completions are running around 180,000 dwelling units per year. So that's actually roughly close to where we should be building to match the pace of population growth in Australia over the past year or so. So that's good news. On the other hand, though, I think there are definitely some bad news in this release, and that's coming from the building completions number. So building completions actually went down about 4% over the quarter. And over the past year, it has gone up at a much more subdued pace at just 3.7% over the year. And it hasn't actually increased that much over the last 2 years, despite the boom in building approvals as well as commencements throughout the 2021-2022 period. And what does that tell us about the industry? I think that suggests the fact that maybe abandonment rate in the construction industry is still pretty high. It's still quite elevated versus the pre-COVID level. Maybe the time it takes to build a dwelling unit is still quite high, especially for apartments. And if you look at insolvencies data, so the share of companies that went bankrupt in the construction industry is still pretty high compared to other industries as well. And that's definitely the bad news. And you have seen that reflected in the subdued building completions data.
How do we fix some of those problems that the industry is facing?
Yeah, so there are a few areas to fix here. So number one is definitely on the approval side. We definitely need to speed up the rate of approvals, especially for higher density buildings in Australia, because that's the best leading indicators to how many buildings we can actually build. But once we get that approvals through, we see that there are still a lot of bottlenecks within the construction industry in terms of finding skilled people to build in Australia. We've had quite a bit of difficulty with getting materials and parts. That have eased quite a bit, but data from the ABS still suggests that there's still the labor market in the construction industry is still pretty tight, especially with like the share of workers in the construction industry. It actually hasn't gone up that much over the last few years, and especially if you look at the share of migrants, for example. So we know that population growth in Australia is quite heavily reliant on the migrant population. The share of migrants coming into Australia working in the construction industry is actually only about 2.8%. Compare that with a construction workforce share of about above 9%. So basically, we're getting population growth, but most of them actually don't work in the construction industry. So I think if we really want to fix up that level of supply in Australia, we definitely need to bring up that the skilled part of skilled labor in the construction industry much higher compared to where it is now at the moment.
We saw earlier this week Treasury advised the government after the election that their plan to build 1.2 million homes in 5 years was doomed to fail. What are your thoughts? What are your thoughts on that?
I mean, I kind of agree with what was leaked, and I think economists have been saying this for quite some time now. I think it is really hard for us to reach that 1.2 million dwelling target in 5 years. So let's break down the numbers. 1.2 million over 5 years, that's 240,000 dwelling units per year. Again, our number of dwelling completions or approvals are actually only running at 180,000. So we should be building, so that's 30% more than where we are at right now. And so again, how do you get building approvals or completions 30% up within the matter of months or even a year? I think that's pretty hard to see that becoming reality. And again, second of all, we've talked a lot about all those issues in the construction industry. How do you get more labor in the construction industry to get that number of building completions up? I think it's a more medium to long-term fix rather than a short-term fix. You can't train a tradie in the matter of 2 months unless you change regulations drastically and you have lower quality tradies in the industry. So yes, I don't think that we're gonna reach 1.2 million dwelling units in 5 years. But again, I think on the bright side though, we have seen dwelling commencements picking up a little bit over the past few months. So maybe we'll get a bit closer to that target, but we're probably not gonna get there.
What kind of policies do you think should be introduced to address those housing and building issues?
So I think a lot of the policies that have been put up by not just the current government, but also on the opposition side as well, that we have seen throughout the election campaigns, have definitely been on the demand side. So again, making it a bit easier for first home buyers to get into the market. Yes, that is fantastic. I think that's great for some of the first home buyers who get in early, but ultimately any demand side policies would only help to push up prices and actually make the affordability issue worse for Australians. So how do we actually make homes more affordable? Again, we actually just need more supplies. And in order to speed up that supplies, then we have to target two things. Again, making the approvals process quicker, not just with the low-rise building as with that pattern book that was released by the New South Wales government, but also higher density building. And second of all, definitely need more investment into education in the construction industry to just make it easier for people to get into the industry, maybe make it more attractive for young people to get into the industry so we can get that labor force up. I think those are the two key issues that the government probably should focus on. But then again, all of them are pretty medium to long-term fixes. I think it's just really hard to see that affordability issue being fixed in the matter of 1 year or 2 years.
That's My Bui there from AMP. Now, Market Day on the SBS On the Money podcast. So the Australian share market actually had its sharpest sell-off since May. The S&P ASX 200 down by 0.8% to 8,561. 9 of the 11 sectors were lower. The worst performing financial down 1.23%, followed by materials and utilities. Healthcare stocks also down. No match though for information technology. That sector up by 0.85%, mirroring some gains on the technology-based NASDAQ in the US overnight. For more on that, I spoke with Niv Dagan, Executive Director at Peak Asset Management. Niv, can we start with US inflation coming in at 2.7% in the year to June? That's up from 2.4%. To what extent do you think tariff policy is now starting to show up in consumer prices there?
Yeah, we've seen the US inflation come at 2.7%, which is in line with the bank of that 2 to 3% target range. We feel that the market has largely factored in a lot of the tariff talk, Ricardo, and a lot of that will be resolved in the not so distant future.
What do you think that would mean for US interest rates? Because at the same time, Donald Trump has been long calling them to be a lot lower.
Yeah, look, we're expecting US interest rates to fall at least by 1 percentage point over the next 6 to 12 months. We feel that Donald Trump, on purpose, is shifting gear to put a lot of pressure on the interest rates in order to refinance that US debt coming up. So we feel that, to your question, US interest rates to fall by about 1%.
Still, I think there's some talk that the next move in rates in the US, while down, the US Fed Reserve is meeting at the end of the month. It's likely to stay on hold. Despite all of this, despite inflation still coming in towards the higher end of the band, shares on Wall Street were lower, but the tech-based NASDAQ rose. What's that all about?
Yeah, look, we are seeing a little bit more of a shift as consumer price index fall. We're seeing a little more confidence coming into the US with manufacturing and investments. So the US technology space has done quite well in line with Bitcoin, which is a measure of fear and greed at the moment, Ricardo. So we are seeing investment money back into the US tech space, and Nvidia is now hitting $4 trillion US.
What about our share market? It's lower. Why? And what's driving it? Because I think it's having probably one of its worst days in about 10 weeks, right?
Yeah, markets are down about 75 points at the moment. I think we've had a significant run in the last 12 or so weeks. So it is taking a little bit of a breather going forward. We are seeing commodities and oil and gas stocks down significantly today. And some of the banks, the big four banks, are under a bit of pressure. But we feel that the long-term trend is on the way up, and we should see some money back flowing towards the end of the month.
Lithium's doing well, though, along with some news in the rare earth space. What can you tell me there?
Just in the last few days, we saw the Pentagon itself invest significant capital in a listed rare earth explorer and producer called MP Materials that's listed in the US. And just last night, Apple has sought to invest $500 million into that same company. What it does go to show is that a lot of inflows coming into rare earth and materials, and that reliance away from China. So those stocks with US exposure and US assets, especially in the critical mineral space, are outperforming significantly.
It's Niv Dagan there from Peak Asset Management. Don't forget, if you enjoy the podcast, to give it a rating or review on Apple Podcasts or Spotify, and to click subscribe. See you next time.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.